Welcome to the StockMentor.com studios here in the hot Black Hills of South Dakota. I'm your stock mentor. We had a down day today. It was really kind of, it was literally up and down today. We had a hard move down, reaching about 1085 or so on the SPX, climbing all the way back up to about 1100, only to go all the way back down to finish at about just below, important, just about that 1090 mark, below it, 1089 for the close. So, will that mean anything? Well, let's get into the video and talk about it a little bit. Let's keep this in mind. The big push here for the Dow was above 10,200. Okay, above 10,200. We got above there yesterday. Not able to hold it today. It wasn't a major move down. Just kind of a slow retreat. Love that this blue line held. Love that. So that's a good thing for the bulls if you guys are looking to get a little bit more bullish on the markets. I'm not necessarily, well, I'm not necessarily convinced that we're going down, and I'm not necessarily convinced now, after seeing no confirmation by the bulls today, that we're going up. I'm going to diagnose it over the weekend, but I'm telling you where I think I'm going to be come Sunday's video, Monday's video, and that is neutral coming into this thing. We're really in a tweener stage right here, which is exactly where the markets love to leave us on a Friday afternoon. And whether it be a 2-day weekend or a 3-day weekend, doesn't matter. Markets love to leave us hanging on a, well, could go up, could go down type of a place. And that's exactly where we're at. Closing below the 10,200, I think, puts a little bit more back in the bear camp. I'm not convinced it's a lot, but you got to look at it for what it is. That's what the charts are saying. If we move on to a daily, we'll see here on the Dow that we were not able to once again close above that 10,200, nor were we able to retest this 200-day moving average quite yet. So, still a lot of work to do from the bull side. Really nothing broken here from the bear side. Might have looked like we might have had something started on a smaller time scale, which was the 60-minute. But from a daily, there's, well, not a whole lot to get real excited about yet. Just watch these levels. Once again, these big levels are still holding firmly in the bigger scheme of things. So we'll see what happens come Tuesday, but as it stands for the week, we are still neutral to bearish on the markets. NASDAQ on a 60-minute, you can see the little move up, move down, move back up. Little bit of choppiness here by the time it was all said and done. Really nowhere in the grand scheme of things for the NDX on a 60-minute. Not around a moving average, not around anything major trend lines, nothing like that. From a daily, same thing. However, it is bullish for the Nasdaq to be up and above this 200-day moving average. We have not seen that, and are not seeing that on the other indices. Are not going to do that? I think so. Anyway, SPX and the Dow, they're both struggling with this 200-day moving average. Nasdaq's not having a problem with it. Let's see if it can help lead the other indices up and out of this area. Maybe this is that bounce that we're talking about. Still a little bit early to be calling it that, though. I had some nice movement yesterday, and just no confirmation today. No follow through at all by the bulls. And so that leaves us at the end of the week with these type of candles. What are these type of candles? Well, we touched the 50-week moving average, but never made it back to the overhead resistance at the 20-week moving average. So stuck in an in-between mode. Still watching this lower line right down here, about this 1750-ish area, is really a line to be watching on the weekly. But so far, if the daily decides to move itself back up, we have to start looking at these upper levels, which would be the 20-week and then above 1950. SPX on a 60-minute also doing the same type of thing. Now, markets finishing down almost 1% on all of them, with the S&P down about 13, almost 14 points today alone. So these little moves here don't look like much, but they sure add up to quite a bit in the bigger picture. We'll talk more about it this weekend, where we see it going coming into next week. But we still are kind of holding on to the 20 and the 50 period moving average on the 60. If we flip right to a daily, you can see where we're at here, right back down into this major support line, which has been holding very nicely, and that is at or around the 1090 area. That was a get long moment for my subscribers when we got back above that 1090 area for a play. Today, coming right back down, not able to, while we did test the 200-day, not able to retest or really make a run at it today for the most part in the market. So right now, guess what? Yep, 200-day has now turned from a good support area into a pretty decent resistance area for at least the time being. From a weekly standpoint, here you have up above and closing above the 50-week moving average, precisely what I would have maybe expected from the SPX this week. I didn't think they'd want to give that ground quite so soon. More important to notice, though, that we have already tagged this lower line down here about, well, let's call it 1045-ish or so, somewhere down in that area. This 1045 was hit. The low was 1040 here, so we have a touch of 1030 here, 1045 here, and 1040 over this direction. So you can see the support down in this area. Now it's a matter of, is it going to hold on future tests? VIX on a daily, it did finish back up today, 2.39, but in the bigger picture from a weekly, we are still right at, on, or just above that yellow zone. Let's call it still in the red zone from a fear standpoint. So these lines holding nicely on the VIX and showing us a little bit of, for the week anyway, fear coming back into the markets. However, bigger picture, it's all sideways, it's just chop. There's a lot of indecision right now, still a lot of indecision right now in which way the markets are going to go from a VIX standpoint. There is this is kind of an extended level of fear though. So once again, this weekend, I don't like to get into a lot of ideas for the weekend simply because we don't know what's going to happen. Another bailout, whatever, bad news. Maybe the U.S. gets downgraded this weekend, and that's going to open the markets. It's going to be catastrophe for the markets if something like that happens. But so I'm not going to speculate on what will happen over the weekend. I'm assuming they'll try to keep all and any bad news out of the markets because it's Memorial Day. Everybody wants to be happy and beaver cleaver for the weekend. Apple on a 60-minute coming right back up to what? Oh, look.